Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. Thanks for visiting us today. I'm your host, Tom B. Thanks for visiting today. Let's take care of business here. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room, but if we get there, we'll talk. Now, this is based on structured trades. These trades are available to everyone in the Bookmap Discord TraderLab community. The TraderLab is a group of like-minded traders come together to leverage their collective experience. This is about the business of trading, building trade plans, understanding the business is a gaming-based business based on statistical probabilities in a random environment. This business is trying to deal with the psychological impediments of uncertainty. And that is why most retail traders, no matter what they do, either they don't understand the business, they don't understand the obstacles to sustainability. TraderLab is built on helping traders understand what they're trying to do here, and that trying to fit this business into their comfort is not really where it's at. This is a business of discomfort. It's discomfort because we're wired to avoid risk, so we're continually uncomfortable. And if anything, we try to avoid risk because it's our primal wiring. It's a great idea when you're out on the savannah with the saber-tooth tiger. It doesn't work so good here. So if we can understand the impediments, maybe we can design some solutions, and that's what the TraderLab is about. It doesn't matter what kind of plan you have. It does matter if it has a statistical edge, and it even matters more that you can actually execute the edge. It doesn't matter if you have the best plan on the planet if you can't do it. Why can't you do it? Typically, it's because of primal wiring and your fear. Looking for certainty, looking for confirmation. What happens if you're in a business where it doesn't exist? You ever thought about it? Maybe you can't have what you want. And what you want, is that driven by the needs of the business or the needs of your psychology? Your psychology and this business are actually opposites. So if you're going to be in the business of trading, you need to deal with your psychology, learn how to manage it, so you can then apply a business model that is gaming oriented in an environment that's 100% random 100% of the time. And you have to take my word for it, but just take a look at your results. What are the impediments? Are you playing a video game, or do you actually know where your trades are, where they're going to show up, and you also know you have no control over the outcome? You know the only thing you can control is yourself? Do you know that casinos build bigger casinos, give gamblers the tickets to the buffet and the cocktails, and still derive a profit, even though they pay to gamblers? How can they do it? They do it because they only play games with an edge. They're disciplined, and they don't. It's not about getting approval from the gamblers. It's getting approval only from their plan and extracting their edge. Your approval in this business is your plan and sticking to it. Not the last trade, not your P&L. The P&L is the outcome of having a play with an edge. Then whatever happens is random. Hope that makes some sense. Welcome to TraderLab. If you're interested in TraderLab, what we do, this is advanced trader methodology. Now, let's separate the term advanced from complicated. This is actually simple. What is not simple for us, and we perceive as complexity, is randomness. They are not the same. The market is always random, and we confuse that and define it as complex. It is not complex. It's actually simple. The key becomes, we think that if we have complexity, that we're going to find something nobody else has found, that there's somehow a magic mix of things, of stuff. Is it possible that has nothing to do with the problem? Maybe the problem is we make it complex in order to create certainty, whereas the solution is simplicity, so we can actually have an objective process that we can replicate and measure. Think about it. Just think about it. Now, let's talk about the higher time frame, if you will. Now, this is a swing. I also often get asked, how do you build these higher time frame structures? Well, for me, I look at swings. Now, and a swing is a very simple concept. It's up, down. I know. But what else do we know? The behavior of the market is generic in all time frames. And once we get into the developing time frame or intraday time frame, the clock is no longer part of it. So I perceive it a little differently. This is time because these are RTH candles. But when you get into intraday, the clock goes out the window because we're not dependent on the clock. But for RTH, it has an open and a close, so it's clock based. So how do I create these? I look at swings and I draw a profile over the rotations. Now, in theory, let me give you the term theory. I could have a profile from this low to yesterday's high. It would show me the same information. So I can kind of slice and dice this thing to whatever I want to see. But let's assume this is the swing low and this is the swing high, yesterday's high. Now let's come back to what happened. Now, you know, yesterday, actually, this was shorts near the high of the day. You guys followed the stream. And this was the target coming down. That's what we call a direct hit, at least in trading, right? Then the next part of it was, on this day, I was looking for longs. And the idea of this was to come under this low, get this out. There was a couple possibilities. Get long here, come there. That was the target early in the morning. That trade did not go past there. C'est la guerre. Then get short and then turn around and get long again. So this became problematic for me because this, you know, coming out here. Let me tell you the rationale for this. If the market is long, sell stops, sell stops, sell stops, sell stops, sell stops, what are we looking for? Before the market goes up to go down, the market goes down to go up. The market goes up to go down. The market goes down to go up. The problem was down. So after taking these guys out and thinking that now, because we opened higher here, that we now had this, not so much. And then we got this fuel under here, but we didn't get here. Interesting. So we wiped everybody out, including me. And then I got long down here, and that's just trading, you know, and came across the range. So I got back to my targets, but it was like, you know, this is trading. You want to hit yourself, you know, with a frying pan, cast iron especially, a few times because it's like random and it can be very frustrating. So I leave the frying pan locked up. Now, yesterday, this was our level for longs. And if you followed the yesterday's stream, it was, we got long here. And then it was wherever, you know, the wherever is part of the thrill. Now, this is where we are yesterday. So that's Thursday. What do we know? The market goes up to go down. The market goes down to go up. The market goes up to go wherever. And that's where we are. Now, I'm going to show you something else. This is another look at the same thing. This is the market profile and volume profile combined. The little letters are time-based. They're 30-minute. They call them brackets or TPOs. This is before we had access to volume. And this is how I learned it back in the mid-'80s. Now, today, we have something different. Not only do we have the letters, we have the volume, which is the gray area. So this is what we have currently. This is the RTH open. So we open, going to the moon, Alice. But what else do we know about today? Let's look at yesterday. Now, this was the longs yesterday. Very sweet, right there. And that's yesterday's low. This is called a single. A single is, and this is the first hour's high. And remember, we had a long continuation trade from here yesterday that I narrated. And all this is in the streams if you're inclined. And you're all welcome, by the way. Let me just make sure I got everything here. So this is called a single. And what's a single print? Very simple. It's when the market rips and it doesn't come back. And this is from market profile. It's a low volume area. What the market tends to do, is to come back and check these. So this is a target coming down. And of course, it's not a recommendation. We're all clueless, so don't worry about that. So possibility to come here. Now, there's another thing, and this is today, don't forget. This, and I'm going to show you this in Bookmap, but I want you to see the broad stroke. This is an auction. Too high, too low, and we rotate. And if I break away from it, we're rejecting potentially this area. Then we start this again. Rotations. This is how the market tends to work. Remember I mentioned fractals. What's too high? This is our outside edge now. It's the same as this. Too low, too high, retail. I'm out of here. You're crazy, Tom. It's Friday. What do I want to own an S&P over the weekend for? I already got profits in here. The market goes up, go down. The market goes down, and we'll find out where. You see? So, too high, support, or target, I should say, not necessarily support. So, for me, not a recommendation. It's shorts, continuation shorts, mean reversion shorts, outside in, and it can continue all the way up. We are in a higher time frame bull market. Target here. Okay? I hope. Now, is everybody with me so far? I see that there's a thing with Discord. If you lost audio, that is I am still, as they say, I can see that the audio is still going. So, actually, let me see here. One. Check. I'm going to try to reconnect over here in Discord. Guys, in YouTube, hold on a second, all right? Hold on in YouTube. I got to reconnect over here in Discord. See if I can't get this thing working again. One never knows with these things. High tech. So be patient. Check 1, 2. Check. Just a moment here. Just checking some settings. Everything should be working. So part of the thrill. Let me try to get the stream going again. All right, this ought to be working shortly, and if it doesn't, come over to YouTube. That's all I can say now to this. There seems to be a problem with Discord, so let me see if I can get this working again. One more try. Okay, apparently there's a problem in Discord, so that's not going to work. All right. If you're, how are we doing in YouTube? Are we still percolating here? Well, I can't tell if I'm streaming in YouTube or not. Can I get a check in YouTube? Okay, Skype, thank you. Okay. All right, guys, let's get back to this. Sorry about this. RTH open. So let's go back to the context. First of all, we take our grid sheet out. What is the condition? We're opening out of range in a gap. So let's come back here. RTH open. Yesterday's high, new all-time high. Overnight volume point of control, the highest volume in the ETH, which is there. This is an outside edge, a low volume node. It is resistance in the ETH. There, resistance. So RTH open, and I'm using the ETH. It's the last auction. Let's just look at this for a moment. So the idea of the auction is it's a language. It doesn't tell us what's going to happen, part of the thrill. But it gives us some insights. So we have the ETH high here, and this is an auction in the ETH. Too high, too low, retail, high volume. Now, if I open below this, which is here, I have resistance here. I have a low volume node in here. It's actually about a little higher, actually. Let me see if I can grab this. I want you to see structure, because trading is about structure. So this is what I know. And so this is an auction. This little thing going on here, too high, too low, high volume. Think of this like, I'm not paying that. Yeah, but it's on sale. And this becomes the retail price. In other words, if you think of this like shopping, that's the high volume. So I know if I break away from this, this can become resistance. So ETH high, we can go up there. Of course, we could do anything. This is part of the thrill. Now let's go back to our grid sheet. So the ETH is long. Yesterday, of course, is long. What do we have going on? We have Friday, and we have at 9 a Central Time, the University of Michigan pre-report, a big report. So what might happen in front of a key report? And the market's long from yesterday. If you're long and you have a report that can, who knows, create outsized volatility and whatever else happens, you might take some dollars off the table. When might you do that? Wouldn't it be in front of the report? Now, remember, ETH. Now let's get into this thing. So now we know right here, let's just look. What do we have here? Remember, too high, low volume node. What else do I have? You ask. I always ask myself too, what do I got going on here? I don't know. Liquidity, 1,000 icebergs. Do you think this might be material? I'm just asking you. 1,000 icebergs selling. And this is pre-RTH open. Why are they getting out of Dodge? Great question, isn't it? So let's watch. Now, I didn't see this. I didn't notice this. I'm just letting you know. Didn't see it. This now is the RTH open, and I'm going to show you structured trading. Now, the thing about structured trading is, doesn't matter what you do. I'm not saying you should do what I do, because there are days everything seems to run smooth, and there's other days you want to step on a rake. And part of that has to do with randomness and being human. So what I know here, if I look at this, I know about that. And I know my liquidity was there. That's all I know. Now I have the RTH open. Now let's look. Well, first of all, this is important. The sellers were here. I come here. Now this, let's just talk about what's going on here. RTH open. What are the possibilities? I'm opening out of balance. And I need to know now, is the market responsive, which means Responders are responding to the higher price over yesterday's high. And this is a gap. What might we do? And if we do get responders, then we want to get short. But we don't know if part of the thrill is we're going to get responders here, find buyers, and keep going. Again, remember, it's Friday. If you're long, are you going to go home over the weekend long? Or are you going to take some dollars off the table? You always have to ask yourself that. What is it about Friday? One way or the other, long or short. And what is it about Sunday night, ETH, and Monday morning? What about those times of the week? What does it mean? How do traders respond to those things? You should make a note of that and think about it. So is the market responsive? What do we do? If it is responsive, then we were going to fade this thing. So let's see. So right here, sellers are here. Yesterday's high is here, all-time high. What's possible? Fill the gap. What do we got down here? Liquidity. Let's just watch the behavior. This is called VPOC migration. And you guys follow the stream, you know what VPOC migration is. It is the highest volume. Now, when you think about the auction, we all are indicator-based. I get it. I'm not, but you are. If you are, and fine, we all kind of go there. We're looking for Google Translate, of course. Well, I threw my indicators in the garbage can a long time ago because they didn't help me. They actually were the problem. I didn't understand that. They all work randomly. That was the catch for me, not you, me. So if this is my retail price, the yellow line is the highest volume. It's 0 at RTH open, which is 8:30 Central Time. Then the volume starts coming in. You'll notice I have volume here and the market moves away. Well, now, where's the volume? The market has to pause and chop for the volume to move lower because now I'm putting volume in. When I leave a location, I left the volume here. But now let's talk auction. Auction is a language. So the language of the market is if this price is too high, just like in your store, just think shopping. That's why you already know how the market works. You just need to understand where the behavior takes place and what it means. You become the quote indicator. You take inputs and then you translate versus your indicator, plug and play Google, telling you what's going on. I think your mind is better than any individual or compound math-based indicator, which has no clue that we had a big day up yesterday and that there's longs in the market and we can get profit taking. What indicator is going to tell you that? I don't know. So I don't use them. I use my intelligence, which I think still has a bit of an edge. Too high, variable high volume node. So I'm anticipating two things: profit taking and possible continuation trades. Let me give you some statistics. We're opening higher outside of range. Now you have to vet everything for yourself. There is about a 98% probability we take out either the first hour's high or low, wherever that's going to be. There's a 97-ish% probability we take out either the ETH high or low. Where's that ETH high? There. Or ETH low, down there. Lovely. There's here a 79% probability we take this out. Oh, looks like it's favoring the long side. There is a 67% probability we take out either the previous high or low. Well, where's the previous high? It's there. Then the first hour's high, 62%. The first hour's low, 58%. You notice it's going down. Well, how can that be, Tom? Right? Statistics say this. Yes, but what is the condition of the market? This is where traders have problems. The condition of the market is long. And what does the market do? The market goes up to go down, and the market goes down to go up. Holy mackerel. How do you sort this out? Well, here's how you do it. You need to understand how the market works, and you need to understand something called context. Context is the market is long, and we're in a bull market. Lovely. It's Friday. What do you want to do? You want to join the guys who might be taking some profits, or do you want to maybe ride the escalator down with the profit takers and get into sell stops that are under the market, or both? Figure that one out. So in the TraderLab, you'd have a plan. Now, like everybody who trades, you're going to zig, the market's going to zag. That's called taking stops. We have to get over it. Nobody likes it. What are you going to like about it? There's nothing to like. So let's look. So this is our variable high volume node. And what you'd be doing here, you'd be looking for either long continuation trades to come back here, because this is the retail price. So that's the first trade. So the first trades I'm looking for, win, lose, or otherwise, is mean reversion to come back here. So I'm looking for profit taking, and I have the gap. So that's where I'm starting out. Let's watch. So here's what I'm looking at. Lower highs, selling icebergs. Lovely. What about this? Too high. So my objective is to try to come back here. So I'm letting you know initially I'm looking to come back here. But I have this high probability. So I'm hanging out, looking for longs. Now, VPOC migration. That is saying there is more volume here. This is logical because we spent more time than this. So, but it also is a language, and it's telling me don't forget, in the ETH, my sellers were there. In the RTH open, too high. I'm not paying that. This is you shopping. I'm not paying for S&Ps. Now we have a new retail price. That's too high. New retail price. I'm going to mark this. I call it a variable high volume node. Same as here. So let's just watch it now. Now, the open for me was a bit challenging, which is fine. It doesn't bother me other than emotionally. Everything bothers me emotionally. But this is where we're going. Okay? So, new retail price. So what do I see happening? Mid VWAP, and we are sloping down. I know that. But I'm looking for possibility of, and I can't take a short here. It's too aggressive, too fast. I'm not going to sell this, just not my thing. So I don't have a short. I'm going to look for a long to revert back and maybe squeeze these guys out. That's my first trade. I'm not saying it's a good idea. I'm just saying it's my thing. This is resistance. This is now support. Let's watch. Now these are microstructures, and I always say in TraderLab, don't trade here because it's maddening. It's fast. There's no time. This sets up right here a potential long right here. Your resistance is here. Now, if you didn't get long, this is your resistance, okay? So this is a potential long here, and you're going for this. This now is support. Let's watch it. If this holds, now you're coming back for this. So here's what you have. Now, this is very advanced, and I don't suggest, I'm just showing you ideas, okay? The idea of this is that you can learn this, but this is the last trade anybody ought to be taking because this takes more skill. Part of that has to do is, look here, we're in 1 minute. So that's the problem with this, because of speed. The market's not waiting. It's very volatile, and a lot of volume gets done on the open. Okay, so this is structure. So I want you to see structure. Icebergs are here. Liquidity comes in. This is what makes this more advanced. The sellers were here. The icebergs in the ETH, the 1,000 were up in here. So this right here is resistance. This becomes resistance, which becomes break above it. It is support. This is a long, and you're trying to go here. Remember what this is. This is too low. That's a long, and you're trying to come there and then there. So that's the trade. You take a stop if you went long here. If you got long there, that's the target. I hope this makes sense. What I'm sharing with you is shopping. Not, I know, trading. But what is trading? Shopping. Why do they think the old saying is buy low, sell high? Buy low, sell high. What's high? That's high. This now is high. If this is too low, that might be too high. So if I get long in here or here, which is the actual retracement, then I got to get to there. So this is a structured trade. This is a reversion trade. Is everybody with me? I know this might be a little strange, but, Are you guys with me? So, too high. Now, let's come back the other way. Let's look at how you turn the barge around. By the way, I haven't seen any of this, but let's look at this. What do we know? Too high? What do we know here? Where was our resistance? Isn't it there? Where's our support? Isn't it there? Resistance. Now this, when this happened, this caught me by surprise. It was like, what's going on? These are longs to there, to there. So, subject to your plan, long to there. When this breaks here, this is your resistance. This becomes your support. This is VPOC migration. Watch. So these can be longs, but that's your resistance. Just saying, it's up to you. Now, we are anticipating selling, don't forget. Right? VPOC migration. Okay, resistance. If this moves up here, then it's either that or the opposite, and nobody knows. But we do know where resistance is. It's there. And let's come back, just in case. I got to put this out here. I'm just showing you how I kind of organized myself because I don't remember what happened here. Do you? You forgot all about it, or at least I did. So I know too high, too high, too high, too low. Let's watch. And you're going to stay with me now. This is called trading in fractals. These are structured trades. Now, what is a fractal? Remember I said we have RTH, but once you get inside of the developing, quote, time frame, there's no more clock. What creates levels? It's how long does it take for this thing to say, I'm not paying that. Sellers are here. Chop, chop, chop is an auction. Buyers are there. Sellers are there. I leave the store. I come to support. Too low. Where was too high? There. My buyers are here. My sellers are there. Support, resistance. Where am I leaning? Well, I could buy this to there, or I could sell this to there. Either one is fine. Fill the gap. Come back. Where's my resistance? It's here. Let's keep going. We get the report. No, we don't get the report. This is pre-report. This, I was long here discussing along with one of our traders, and this was like, what? And I go look for news. There's nothing. Like, what are you talking about? Now we have the Michigan pre. This is a major report. I don't trade in front of these things. I just say, I'll see you later. There's always another bus. Look where we come. Too high. Now, let's watch. There was another short in here. Where was it? Hold on. There was a short here. I got to find it for you. Yeah, it's here. This is a bit advanced, but what you got here is this is the retail price, and that's your resistance. Notice where we spiked. We came all the way up here. There's no way to know. Okay, that's just life and trading. Down here, we have our buyers right here. You can see the volume. Let me show you the structure. And I'm going again a little bit more advanced. What I'm doing is I'm trading in something called fractals. And it's almost like slicing an onion down. I need to understand what this is saying. It's language. I have buyers here. There's the liquidity. I take them out. As far as I know, it's going to zero. I come back here. Now my VPOC comes down. That tells me that this is too high. And this yellow line is going to move around all over the place. And what I'm trying to do is stay in alignment with it. That's all I'm trying to do, because it's language. So I'm speaking, you might say, a foreign language. So right now I know too low is here, too high is there, too high is there. I don't know where too low is over here, except I see the buyers here, and I have my buyers here, and I come back here, and I'm going to draw a little line for you now, because you're going to see a fractal. What is this little thing here? That high volume is the same as that high volume, is the same as that high volume. All of these are auctions. Too high, too low, retail. If it's too expensive, we leave the store. Goodbye. Say, here, too low. What do? We leave the store. Oh, really? Too high? And now that VPOC is here, we leave the store. But too low, we leave the store. It's still too high. We leave the store. It's too low. We leave the store. Sorry, Charlie. We break. What is too high? This. Test. Sweep. Low. All right. Say la guerre. What is this? We leave the microstructure here. We return to the VPOC. Is this too high? Is that too high? I don't know, Tom. What do you think? Well, this looks too high to me. Where's the support? It is there. I get under here, going to zero. What happens over here? My buyers were here. That's absorption. Where's my resistance? It's here. I get through here. Where's my next resistance? It's there. You see what I'm saying? I'm just trying to show you structure. This is structured trading. And what's going to happen? Good luck with that. We don't have that answer, but we do know something. We know liquidity is coming in the book here. I know when I see this that I have a seller here. I know when I come across here, the last place it was too high was there. And I have this. What might I do with this? Now, I'm going, don't forget, we don't know. So, no clue. This could be a short or nothing. Doesn't have to be anything for you. It could just be what's going on. I ask myself that all the time because I don't know. What do I know? My buyers are here. Now I get VPOC migration. What is the language saying? Tom, maybe not. Oh, great. Now what? Where's my support? Here, here, here. You notice what's happening? VPOC migration. What has to happen here? That. What happens? Watch. And I know we got this report, which throws like the hammer in there, messes it all up. I look at this and I go, what's happening? Because I don't know. I go, I can't figure anything out on that, but let's watch. So where was my volume? It was here. Now this rips everybody. Everybody gets a coupon to the buffet. Right here. My high volume is in here. It's actually there. There. That's my resistance. That. Right at yesterday's high. I'm now inside the range. And now I'm looking for, I have a statistical probability of getting here. Naked volume point of control. I didn't give you this one. And it's not a high probability because theoretically we think we're going higher, but the market is oriented to go lower. It only has a 38% probability. But yesterday, this was the highest volume. Remember shopping. If I find too high in the developing time frame, I can come back now in the range and check this. Is this too low? This could be a target if you're short. Let's assume you're not anything. You're just sitting here with the rest of us with your jaw on the ground. Let's just watch. ETH low. Remember, 98% probability to get either to the ETH high or low. Let's look. Let's look. Now, if you're short, this is a target. This is a target. And the reason was, as you remember from the top of the stream, 97%, almost 98% probability we take out either the ETH high or low. Lovely. Here. Now, there's more. You're going to say, really? Yeah. Let me show you this short. Again, now I'm showing you something that's advanced, so, and I'm also showing you with the benefit of hindsight. Just telling you because that's what I got until I get into real time with you and you guys follow the stream. It's all the same. Doesn't matter. So here's what I know. This, I have buyers here. If I get a reaction, this is absorption. That's where it's coming from, the icebergs. This is my microstructure. Let me take you to it. And again, you're going to find this maddening, so don't worry about it. We all do. What do I know? Buyers are here, absorption, but let's come back from the other direction. What do I know? I'm just going to grab a piece of auction here. Sellers are here, buyers are there, sellers are in control. Where were the buyers last? They were right there. Just watch. I'm going to draw a little box. I want you to see structure. Remember, this is called structured trading. I can't use indicators because this is my indication. This is the language of the market. I don't want to be waiting. I can't afford to wait. I need to understand this. And this is order flow. The sellers are below the buyers. So there was buyer there. That's why we did this. But why did the market not go up? This buyer was absorbed. And I don't know until I break. See how the sellers are in control here? Now, where's resistance? It's there. Sellers now in control here. Sellers are there. There's the iceberg. There's the break. Resistance is here. Break. Test, break. Where's the buyers? Well, they're there. Where's the volume? There and there. Let me show you.
Sweep ES buyers at 63.37.
Volume, break. Where were the buyers here? They were there. Where did the sellers take over? There. Resistance, microstructure, break low. Where were my buyers? There. Where were my sellers? There and there. What comes into the book? Liquidity, break low. Where were my buyers? There. Where are my sellers? There. Icebergs, break low. Sweep. Now, warning Will Robinson moment. You know who Will Robinson was? Sweep, liquidity, support, resistance. Break low, resistance, 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 structured trade, advanced, break low, microstructure, watch. Now, I understand you're going to look at this and just, probably throw your hands up and go running away from the computer, with your hair on fire. But all I'm doing is I'm actually letting the participants let me know what's too high and what's too low. And if I break below support and I come back to resistance and I break below, what happens to this? I can sell this. and my stop needs to be here because that's where it was too high. So resistance, resistance. I don't know about you, but if I get short, and then where am I trying to go? Now you wrote this down. I know you write them down. So in case you got here late, watch the stream. There is over 98% probability I take out either the first hour's high or low. This, which is not here yet, at 9:30, I have a 98% probability. Is there any reason I wouldn't be going for that? And where's my resistance? Isn't it here? And right here, who knows? Resistance, resistance. Sell it, break, trigger. How do you get into this thing, Tom? Well, you could do this. So resistance, chop, 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 break high, break low. There's your trigger. Where's my volume? It's there. I can sell this, and my stop has got to be here. If I put it, now I could sell this, but if I sell this, I got to be here. When it breaks here, I sell this. When it breaks away, I can move my stop. This is all something you got to vet. And where am I trying to go? Under here. Now, what is this? Sweeps. Doesn't tell me anything. What's too high? It's out here. Let's just watch. Does anybody see anything interesting? How are we doing in YouTube? Please give a like if you're visiting in YouTube. Hope you like this. Don't throw any shoes. You can see the resistance. You can see the retracement. So let's talk again about this. What's going on here? Sellers are in control. This is a short. Where's your stop have to be? Over here. Let's put this back. Let me extend this thing for you. What do I know? Let's talk about what I know. I know my sellers are here. I know my sellers are up here. I know I got this coming in here. This is the order flow. So I'm watching the liquidity stack. When the liquidity starts coming in, it's going to support me. It's going to skew the book. Now, the problem with anything in trading is it's all random. I mean, I don't know that, what happens if I'm coming up here and they pull? Then it's maybe a problem, right? Is it possible? This is just a question that the sellers, now there were buyers here, okay? They bought. There they are. The resistance is there. Sorry, Charlie, break low. These guys have a problem. They may want to get out of their positions. You see? Break low. Test. Too high, out of here. Back here. Now what? Resistance. Resistance. This comes in. This is another short. Where am I trying to go at 9:30? First hour's low. Over 98% probability. I'm looking at this. Okay? VPOC migration. Oh my goodness, Tom, going to zero. But here's the but. It can do this, or it can do this, right? Don't know. What do I know here? Liquidity starts coming in. I have no clue. Not my job. This is still my target down here. Sticking to it until it breaks. Now, what can happen from here? If I break above this, now I have to come back and look at my profile. Let's look at the profile and just kind of see what it says. Now, I know you look at this and you think you landed on Mars. At least that's what I used to think. When I first learned market profile, which is before we had anything like Bookmap or anything. We didn't have volume even. So it was different. You look at this and you're going, what the heck is going on? Let me explain it to you. It's not complicated. It's just random. So, everybody thinks trading is complicated. Whenever they ask me, what do you do? I say, well, I'm a trader, And, well, that must be complicated. I'm going, no, it's really not complicated. It's just random. And that's the problem for us. Uncertainty. So they don't get it. I mean, My wife doesn't ask me anymore because she just says, well, hey, how was your day? I say, it was okay. If I don't have a winning day, my day is still okay. Because the only way I measure how my day was is did I follow my plan? The outcome is a result of the plan. So I know this is too high, but let's look at the language. Let me just move a little further down the food chain here. If you think the market might be an auction, which is really what it is, it's trying to figure out what's too high, what's too low. And when I talk about fractals and you guys talk about time frames, that's why there's no clock. This is too high. This is too low. This is the retail price. And that's where the yellow line was. If it becomes too high, the shoppers, who are the traders, and when you go to the store, you're also a trader. You know, if something's on sale, you throw 2 in the cart. If the price is too high, you won't buy it. Exhaustion. And if there's a retail price, there'll be volume there. But if the participants, we run out of participants here, and the collective participants say, nah, we're not paying that anymore, then we ran out and we leave it too high. So sequentially in a fractal, we're doing this kind of behavior in multiple time frames, if you will. So all this auction stuff, and as we go up in quote time frame, I'm doing it inside of itself. So this is what the fractal is. So too high, too low, retail. There it is. I'm out of here. Too high, too low, too high, too low, retail. You're out of your mind. Too low, too high. See it? Fractals. Does that make sense? Can you see kind of how it fits inside itself? Are you guys with me? Please give a like if you're visiting in YouTube. I'm not able to stream in Discord as far as I can tell. Let's see. Guys, are you able to see me in Discord? Oh, it is? Okay, thanks. All right. Nice to know. Everybody, you know, it's Friday. They're having a party in Discord. I don't know what they're doing over in TraderLab, but they get kind of frisky by Friday. So this is what's going on here. If this is too high, and now I start auctioning here, too high, too low, I'm not paying that. Too high, too low. These are fractals. I'm not paying that. And then we're going down the financial food chain. But let's go further. Let's come back to this counter rotation if I can get back here. So what do I know? This is a new retail price. What else do I know? This is too high. I don't know. And where am I trying to go? Lower. Where's my target, you ask? Great question. It's here. So we're trying to go over here. Who knows? So let's come back to the fractal. Too high. So if I come out here, it changes things. Now, let's talk in a confusing fashion. It's not intentional. It's just what it is. Let's summarize. The higher time frame is up, right? Bull market, off to the races. You know, lovely. What else do we know? The market is long. What does the market do? The market rotates over itself in all time frames and fractals. So if the market's long going into the weekend, we can anticipate profit taking. Do you want to hold longs over the weekend? Anything can happen anywhere, right? Geopolitical, tweets, who knows? That's risk. So if we only can control the things we control, we don't control the market. But if we have any experience in trading, we know maybe as day traders at least, and not swing traders or trend followers, we might want to get out of Dodge. That brings the sellers in. So that's why responsive selling. So what do I know? This is too high. This is too high. If I come across here, then I'm looking for something called mean reversion, which is outside in trading. So if I come across here, I have choices. I can take a long, which for me is not in my plan for today. So for me, all I have is shorts, continuation trades. Currently, that can change. So it's only shorts. Where's my resistance? There's my liquidity. I haven't seen any of this, so let's see what it does. We have a structured trade in TraderLab. So if you took this, let's just look at this. We have a trade called VWAP to VPOC, structured trade. And we have the mid. So we have the VWAP, the mid. If you took this And I can tell you right here, if I see this, I would take this short and I'm trying to go there. I also know there's stops at VWAP and mid. If I take this trade, this is a trigger. This is my entry. I would be risk neutral. I'm going to then go here and come out the bottom. That's my trade, right? Where am I trying to go? Here. If I get taken out, the trade scratches. I have another location. My liquidity is still in the book. Where did this come from? Resistance. Now I'm in an outside edge. Remember? Mean reversion. Underline the term mean. How do I want to trade this? If this is the retail price, what's too high? It's out here somewhere. So you're looking for this to go there and to fall out the bottom and to go there. That's the trade. Who knows? Well, there you are. That's it. Now we're in real time. Do you have questions, guys? Now this is maddening, right? Sure, I get it. Truly do. This is trading. I wish I could, make it simple. It is simple. The problem is it's random. So our job as traders is to try to get an alignment. Remember where we're going. Now, that's not a recommendation or a quote or prediction. It is all structure. Does that make sense? How we doing? How you doing in YouTube? Thanks for visiting TraderLab today. This is called structured trading. You can learn this in the TraderLab, and you're still going to beat your head on the desk because it's random. But how do you work in a random environment? The same way the casinos do. You know where your trades are. You don't know if this is the spot or this is. What's the difference between this and this? Well, this one's nicer, but look at what you got. Is there any reason you wouldn't take this short? Now, maybe you wouldn't, but that's okay. I would. It doesn't make it right. It's just a trade. I would scratch the trade because my job is to get risk neutral. I had an interesting conversation recently with one of the traders in TraderLab, and I'm always enjoy visiting with traders, who want to discuss, things, issues, questions, even debates. And it's not right or wrong. It's why would you do this? Why wouldn't you do that? And I'll ask a trader, why wouldn't you get risk neutral? And if a trader says to me, well, I bailed out of a trade, I did this, I'm going to say, well, why'd you do that? Well, it's all in, all out. I'm going to say, well, no wonder you're bailing out. Me too. So how do I fix that? Well, if I get risk neutral, I now calm my fear. I calm it. There's our target, by the way. Okay, this trade is all on the table, right? So everybody knows that. So, and let's come back. When I say everybody, if you're in TraderLab, you would know this. Doesn't mean, by the way, knowing something doesn't mean anything. There it is. That's a target right there. So the idea of this thing is outside in. That's called mean reversion. So when we rotate up, we're looking, and that's the mid. It's right at that outside edge. Let's come back to the idea. Outside edge, outside edge, outside edge, retail price. I'm not paying that, Tom. See you later. Up here in the microstructure. Outside edge, high volume. Get out of here. Outside edge, high volume. You're nuts. Break away. High volume. Too high, too low, too high, too low. Retail. You're still crazy. We're out of here. New retail price. Highest volume for the day. Too high, too low, too high, too low. Retail. There. And then they say la guerre. Is everybody tracking? Can you guys do this? Risk neutral is basically scaling. So let's say I'm getting a question about what is this risk neutral? Risk neutral buys the stop on your runner. And I always talk about in TraderLab a minimum 2-lot configuration. There's a really important reason for it. Now, nobody likes to take a stop, right? Raise your hand if you enjoy taking stops. Okay, put them down. Now, the other thing is risk mitigation. Now, we all take full stops. But let me ask you this. If you know, and this is where statistics come in, if you know you have a positive expectancy to get risk neutral, and I'll define that in a moment, before taking a full stop, does that give you the courage to put a two, I'm just saying a 2-lot, and it's only a developmental piece, okay? It's not the way we're going to operate at some point, but initially, what's the point of getting risk neutral? I don't have to move my stop and put it in the noise with the other retail traders. I don't want to do that. The other thing I don't want to do is I don't want my fear to determine how I trade. I want the market and the structure to determine how I trade, not my risk avoidance or bailing out. Fine, I'm in here, I'm euphoric. I get a counter rotation, I'm bailing out. I'm not even thinking about it. Why would I do that? Because of the emotional triggers, the fear. If I can get risk neutral, then I am calmer. That means now I have a tool to manage my fear. And when I get a counter rotation, I can accept that the worst that'll happen is I scratch my trade versus taking a loss. So that is the concepts. Now, what is risk neutral? From entry to failure is the range to get risk neutral. So, wherever this other trade was, oh yeah, here. So if we took this entry even here and my stop goes here, I would get risk neutral. I get taken out, I scratch. What does that do for me? Well, I scratched the trade, but now mentally I'm going, where's my next location? It's here. I'm no longer wounded going, oh no, I just lost. And now my brain is disengaged because now my emotions are looking at this trade versus looking at this trade. I put this trade on. My stop has to go over this. I get risk neutral. My stop stays there. I break down. Now where's my resistance? It's here. Notice the liquidity. And what do I do here in this microstructure? It's either going to go there or go there. It goes there. Where's my resistance? Here. I'm now under here. My stop can be moved. But now, instead of flipping out and jumping out, which we all do or have done, right? I know I'm going here. I don't know how, I don't know if, I don't know when, so let's not worry about it. I do know structurally this is a target. Let's go a little further. Anyway, I hope that answers the question about risk neutral. It's risk management and brain management. The lunatic. The lunatic I call Hyde. Hyde is risk adverse. It is great for this, when you're out on the savannah with the saber-toothed tiger and the apex predators. Not so good here because the primal wiring responds to risk in any way that it presents itself. It's still apprehensive and uncertain. What's behind the rock? Am I going to be stopped out? What does it do? Let's protect you from these bad things. This trade could be done right here. You could be out of it or you're holding. What's your plan? This is a target. You could be done. Trade's over. Back in the Barca Lounger. This suggests counter rotation. Where's resistance? There. Microstructure, let me show you. And this is the outside edge, low volume node. I'm under here. As far as I know, south. But the trade can be done there. And it's done. You're done. And now, how do you know if you should be done? We're all going to ponder that question. Should I still be short? Should I be long? Here's the problem. When it comes up here, you're going to be ecstatic that you're out. If it makes new lows, you're going to be depressed because you didn't hold on. The voice in your head is going to say, you should have held it. When it's doing this, I should have get out. I should get out. It's going there. Oh, it's going lower. What is the right answer? You want to know the right answer? It's your plan, not the randomness. Do you know or do I know if this is the low of the day? I don't know. Do I think it might go lower? Yes. Do I think it might go higher? Maybe. Can it revert back to the mean? Yes. Can it also keep going down? Yes. Where's my micro high volume? It's there. Where's my outside edge? It's there. Can I keep going down? Yes. Where's my microstructure? Gonna make you crazy? No. It's my job. What's this? Too high, too low, too low. Buyers are here. Break low. Sellers are there. Break low. Break over these guys. Next level. Too high. Where's my sellers there? Who knows? Outside edge. Now this is micro, and I don't mess with this. I'm a little more into this kind of thing. So I know this is an outside edge. So I know if I come up in here, if I stay below here, I can keep going. If I come up above here, I can come here and maybe squeeze. I can do anything, right? So my job is not to predict what it'll do. I'm attempting to stay in alignment with this. That's all. That's what I'm doing. Icebergs are buying into these sellers. They're being absorbed. So this is an area to observe. It's not a long for me. I have no longs, just shorts. This is making some sense. And you guys got the idea, the risk neutral? That's correct, Gapol. It's two contracts, and whatever the risk is to get risk neutral, so the distance from entry to failure, let's just say it's whatever, 3 points. For me, it's around 3 points most of the time, or less. It could be 3.5, it could be 4. I mean, that's up to me, right? But whatever my risk is, that's where my scale is. And I suggest this for developing traders because the idea of this is that you survive your development. And then you could always tweak and tune one, and you collect metrics. That's really the key. Once you understand what's going on, you can always get the screwdriver out. But I'm talking about minimum configurations so you can build a business. This is a business. And there's certain things. Once you understand the business, it almost becomes plug and play as far as process. The randomness is the thing. So you need to know what you will do, not what the market will do, but you need to know how do you define the condition of the market? Where might your trade show up? Where do retail traders put their stops? And if you get a trigger, you put your helmet on and you put your stop above your resistance. Not here. There. Why? If you're micromanaging, these guys can come up here. Your buy stop would be there. You get picked off, and the icebergs or the limits that are sitting up in here in this liquidity fill on your stops, and then you get the break. So I understand, having been there many times, and you guys do too. Oh, they got my stop. Have you ever thought maybe it has to do with where you put your stop? By the way, see, target. Well, here's a question for this astute group of traders. How would you quote, feel if this was your short and that was your target? This is a structured trade in the TraderLab. I always say, and I always discuss with traders, what is the time frame or fractal you trade? Do you really want to be going from there to there, or where are you going? Where are you going? Or do you look at the broader picture and say, I take stops like I do. And when I do, if I'm in alignment and something doesn't change, then it's just location might be a little off. So when I put a trade on wherever, here, I think it was, and if I get wherever it was, and I just put it back on again, and then I'm going for this. Does that take care of me? You see? It's just a matter of process and range. You might find It's not percentage of wins, which is what many of us think it is. Oh, I got a 70% win. So what? Are you profitable with that? I need, for me, what I do, my plan, not saying it's a good one. You guys can develop plans that are for you, not for me, for you. My plan is not your plan. But what I found for me is this is where I get paid. Because along the way, I'm going to probe the market. I'm going to take stops. And then when I get this, it takes care of the overhead and cost of production. And, if it's just from here to here, I'm all right with that. What about you? 10, 15 points plus a scale. If you're only running a 2 lot, never mind what else you can do here. Would that work for you? What do you think? How are we doing in YouTube? Please hit the thumb up and please subscribe to the channel. By the way, the link down there in YouTube, there's a link to the TraderLab and there's no cost. It's open to everybody. And what this is about the business of trading. So there's no hocus pocus here. We don't have the Holy Grail. If you're still looking for it, let me know when you come up with that. And then come to TraderLab and clue us in. But in the meantime, while you're searching for the Holy Grail, there's also a way you can navigate this if you do the work. Now, what is difficult for all of us is finding our groove. For example, for me, now I've traded many different ways over the years, because going on 46 years, you get to do a lot of stuff. I used to be much more short-term oriented. And I found that over the years, and it took a long time because I was pretty good at it, take 100 trades a day, that kind of crazy. But years ago, and this is not in ES, this is in NQ. Years ago, what kind of happened for me was, when I say 100, that would be around the top end, and do less, but around 100, a little more, but usually less. But that's a lot of trading, right? The costs were so high, even though I had a really small commission cost, being not being on the floor. I had to make a decision: do I get a membership to lower my cost to trade the volume, or do I change? So I kind of got the pencil out, and after a bit of work, I figured out the thing to do was to do things differently. So I changed gradually. I cut down on the number of trades because I was staying in the trades longer, and I ended up trading a lot less over time, and I ended up expanding my range. And I trade with targets that are auction-based. This is an auction target. Why was I targeting this? I showed it to you on the price map, right? So this is how understanding how the market works. Now, the problem with this, of course, is, do I go up before I go down? Do I come here and then make a new high a day, then break later in the day? All this kind of stuff. That's randomness. So I have no control over that. So I don't think about it. This is right here, we got to watch this. Now, the thing to understand, this might be the low of the day, and we might come across and come back in here. But this right here is a very important level to observe. Now, the possibilities are this. And right now, I don't see anything to do here. This is my resistance right here. And right here, I have a seller. So we want to watch this for a potential trigger. And then the objective would be to come to one of these high volume areas, like maybe here. So this is not a trade recommendation. The short might be done. So I have nothing here to do, me. And one of the reasons for this is because I hit a primary target. And let's come back and think about what makes this primary. Because this is too low. This is too low. High volume node. Remember high volume nodes. This, let me take you up in a little different concept. Another way to look at this. This is yesterday's low. When I talk high volume nodes and fractals, you see this? This is the highest volume for this whole thing. That's yesterday. That's why it was a long. So that's maybe too low. Now we found too high, yesterday's high volume up here. So what do I have? Well, I have 24, maybe, but I have the single, which is the most recent location of in the first hour's high. Remember the short, first hour's low to there, right? Outside in to here, or reversion to there, but the target was here. Now after this, and what else did we talk about? Wasn't it 24? Let me see if I remember, because I get confused. You know that. 24? See, I'm sorry, 24, it's here. 24, high volume, 24. Fractals, what's 24? What is 24? What is 24? Do you see alignment? Do I want to get short? No. Do I want to be flat? Yes. Do I know what it's going to do? No. Am I going to sell this? No. Is it a recommendation? No. Can it go to zero? Yes. Is this a TraderLab trade? Maybe. In a vacuum, this is a short in the TraderLab. The support is going to be there. Do I want to take a short? No. Might it be the best trade of the century? Yes. Why? Plan. That's why. So do I have to catch every rotation? No. What is my job? To take vetted, structured trades that have an edge. Might this go and fall out the bottom? Yes. Where's my trade though? It was to there. I can take this. Am I going? I wouldn't. But that doesn't mean, why wouldn't I do it? You're going to ask. Well, I hit my target. And if this is too low, who's short? Remember how this works. The market goes up to go down. The market goes down to go up. Is this buying look a little different than the other buying we've seen? Do you think there's a little difference in the buying? I'm asking you. Do you see something different? Is it possible we found too low? And maybe it isn't. Maybe this is still too high. That's all I have in trading is maybe this, maybe that. Maybe that's too low, my target. Maybe this is still too high. Maybe I take a short here, but where is my support? It's there. Hey, do I want to take a short here? Mm-hmm. Do you? This is a structured trade. Let's watch. Let's see. Mentally, get ahead of what it's doing right now. You have to anticipate to participate. In the TraderLab, you would know this is a structured trade. The challenge with this is, what's the higher time frame? Up. Where's my target for my short? There. Bingo. Do I want to sell this? Up to you. Where's my buyers? There and here. Micro high volume. I'm going to put a little note on here for you so you can see it. So there is an auction. Too high, too low, retail. Leave it. Where's my resistance? It was here. Too high, too low, break above. Where's my retail? It's there. Next fractal. Too high, IB, continuation. Where's my support? It's here, in there, and here. Do you feel lucky? Again, we can fall out the bottom or come back to where the buyers took over. The buyers. Are you guys tracking? I can't tell you what it's going to do, right? But would it be useful to know what it might do and where it might do it? Are you guys tracking? Is this logical? And can you see? Let's forget about all this complexity. if you choose. Let's just go to the store together and shop for S&Ps. That's what we're doing. What's too low? Look at the buying. Is this a change in behavior? You see? Look at the selling. Buying, buying. Is that a change in behavior? See? Retail. Resistance. Break low. What's that? I'm not paying that. New retail price. What is this? Buyers. What's this? Resistance. And what's this? Support. Why? The buyers. The buyers. The buyers. Resistance. Resistance, you know the concept, becomes support. Resistance. Looks like it's going up. I don't know from here. This is not my thing. But I do not take a short here. I'm not mechanical. This is a structured trade. Now you're going to say, well, Tom, you're saying it's a structured trade, but you're saying you wouldn't take it. Why? Because the market goes up, go down. The market goes down, target to go up. The market goes up to go down. I already hit my target, and it goes down to go up. The market goes down to go up, goes up to go down. It goes down to go up. And where's the market? Short. Do I want to join the shorts? No. Do I want to be in my Barca lounger? Yes. Might we come all the way across? Yes. Too low? Too high? Too low? Too high? Sorry, Charlie the tuna. Where was it too high? Let's put a variable high volume node out here. Too high. I'm not paying that. All right. Watch. Guys, this is a methodology that is not complicated. I know you're looking at this probably and you're just spinning your head around. That's how I felt. But I'm so used to complexity that I brought my beliefs to this. And what I didn't understand was this is really simple. What is not simple, of course, is what is going to happen. But how about this? Suppose I could understand the language and interpret it pretty well. And I could interpret where something might happen. There. And I can interpret change. So I know, well, that was my target. And I know I had my buyers here. In hindsight, I know I had my sellers here. That I already know. I know when I come up here that this is a structured short and it was too high. I know I could have a structured trade where I could sell this, but I know I already hit I'm just giving you the logic. And this is now my support. I know if this is too low, don't forget where my buyers were, I can come up again to where it was too high. If it's still too high, I can come back here or here. And either we're going to fall out, I have no clue, or my buyers are going to come back in. And if I clear this, I can squeeze. If I can't clear this, then I can take the low. I can do anything, right? But what I'm doing is I know where it might happen. And best I have is maybe this is too high. Right? So maybe if I take a short, I got to scale here. If I take a short, I got to scale there. So let's watch what it does in here. And it could do anything. And again, not a recommendation. Would not be taking a short. This thing could go and fall out. It could do anything. Right? I mean, are we coming back to yesterday's low? What do you think? It might. So, not my job. My job, alignment, understanding how the market works, not making it up as I go, and accept the random outcome. I want edge. I don't want to gamble. I do take risk, which is why I attempt to get risk neutral. And yeah, I take full stops. Raise your hand if you don't take stops. And by the way, don't bother raising your hand. Use the link in the bottom of YouTube and come to TraderLab, clue us in. So in the meantime, stops are overhead and cost of production. The casinos pay the gamblers, overhead and cost of production. We're in the same business. So if you're in a gaming business, not in the business of being right, then you understand you're dealing in an environment of 100% randomness 100% of the time. So it's just about waiting for the trades with edge. Does this trade have an edge? Well, it could, but I just trade the targets. I don't worry about it. I just don't think about it. If I take this trade, remember my buyers. So this is like support. And again, I would not be taking this trade. I've gotten kind of detached from this need to for action and dopamine. I'm much more strategic and patient. I'm only talking about me. I'm not, because this may be the trade of the century, right? Now, and here's the interesting thing. Is it the trade of the century? Or is it just a rotation? Can you tell the difference? I can't until hindsight. So since I don't have the ability to see the future yet, I'm only going to trade with statistical probabilities. I don't need to do this. I can. I don't need to. I will say that if I had some other elements present, I might be a little more inclined. I don't have them here. But, and this is where your trade plan comes in. This is a structured trade. Do you take it? You'd be taking it, you'd be entering in here. And you'd be scaling there, right? Where's your stop? Not there.
Yes, sellers at 6,325.75.
So let's watch now. This is our support. For this to go lower, we got to get under here. This is where now we have a sweep, and we can just kiss this a little bit. If we come back in, we can come back. So I have, again, the best I would have here is like this, maybe one of these high volume nodes. Structurally. Now, if it falls out, changes it. We're getting sweeps here. We're getting our icebergs. Let's see what it does. And it can do anything. These are not trade recommendations, guys. What I'm doing is I'm sharing structure. You trade your plan. But if you know where the trades might show up, you determine whether or not this is your trade. Might be your trade. Might not be my trade. See? Doesn't matter, does it? But if you understand, as I've been sharing with you, where the trades might show up, that might give you an edge. And then it's strictly, where's your trade? Could be there. Or not. See? Final questions. I got about a minute. Ben, would a single be a mean reversion long? Not for me. It's an exit. Squirrel is taking the short at the VPOC aggressive. It's a structured trade. I'm just mentioning that I already hit my primary target. I just don't need to take another trade for the day. I don't want to encourage anyone to take these trades. I'm just here to kind of give you an idea what you can learn, not what you should do. Each trader in TraderLab develops their plan and would learn whether or not this trade has an edge. It is a structured trade. I do not want anyone in this stream taking my trades. And whether or not I would take this trade is not the issue. The issue is more discipline oriented, that the primary target's been hit. So Ben, no, this is not a long. This is a target for me. That's me. You can develop your own plan, Ben, and then that could be your long. Let me see if I can get this working here. I cannot show you the TraderLab community at the moment, but I want you to know there's a link in the bottom of YouTube. You can visit TraderLab. There's no cost. There's a library of webinars, the TraderLab community, and a document section if you're interested in this. Also, there's that library of webinars has streams that are up to almost 5 hours long of real-time narration if you can handle it. And you'll see a lot of variations, trend configurations when we change into rotational or mean reversion trading, continuation trades, reversals, all that. All that's available to you in TraderLab. Guys, this stream will be available over the weekend for everybody. It'll be in YouTube. I recommend and suggest everybody always review these streams, take notes, review the day. Think about mentally track with it. I watch these streams every day. Why? I want to get better. There's always, as we say, room for improvement. Nobody, you're never done in this business. The only time you're done in this business if you run out of dollars and run out of time. And if you're not getting the results you want, come to TraderLab. Maybe we can help you out there on your journey. Thanks again, and don't forget to give a like. Thanks for visiting, and the like is appreciated to support the channel. Since there is no cost, likes are good. Thanks again, guys. Have a super weekend. Look forward to seeing you on Monday. Trade safe.